What are semiconductors? We are living in the world that's surrounded by semiconductor chips. Everything you see requires semiconductor chips to work, from your handphones, your tablets, cloud infrastructure, Internet of Things. Even cars nowadays require a lot of semiconductor chips due to automation. The global semiconductor market was valued at $430 billion in 2021 and expected to reach $772.03 billion by 2030, poised to grow at a compound annual growth rate (CAGR) of 6.6% during the forecast period 2021 to 2030, according to Precedence Research. However, the automotive sector only takes 11.2% market share in global semiconductors applications year 2020. The global automotive semiconductor market was valued at $37.99 billion in 2020 and is projected to reach $113.94 billion by 2030, registering a CAGR of 11.8% from 2021 to 2030. Today, we're going to talk about a semiconductor company that manufactured chips for automotive. The company name is onsemi. Although onsemi manufactured a lot of semiconductor chips for automotive, this does not mean they focus on automotive sectors only. onsemi do manufactures chips for other sectors. The revenue of onsemi are contributed by three main sectors, such as automotive, industrial, and others. The industrial sector includes medical, military, and aerospace, which stands 28% for the total revenue. The other sector includes consumer, computing, and communications. The largest sector was 38% and came from automotive solution according to the latest quarter financial report. There are many products in automotive sectors such as ADAS, which stands for Advanced Driver Assistance System, vehicle electrification, body electronics, LED lighting, and powertrain, safety and security. Since the market share of electric vehicles, EV, is increasingly numerous, the vehicle electrification will benefit in the future, and the company also aware of this. Therefore, onsemi is planning to have 4 times expansion of silicon carbide products, SiC, capacity year over year. SiC is a key component of next-generation semiconductors that provide technical benefits and improve system efficiency in many applications, including electric vehicles, EV charging, and energy infrastructure. onsemi has developed an internal supply chain from substrates and assembly to packaging to assure customer supply of SiC devices to support the rapid growth of the sustainable ecosystem. The acquisition of GT Advanced Technologies, a producer of SiC materials, in late 2021 helped to reinforce the SiC ecosystem. onsemi also planning to exit non-core, low-margin businesses in highly competitive markets. The company expects to exit 10 to 15% of revenue by the year 2023. This will increase their profit margin since the sectors they planning to exit are low-margin businesses. After we knew the future prospects of the onsemi and EV industry, let's have a look to their financial. The revenue of onsemi is increasing every quarter from year 2020 until now. The revenue of third quarter year 2020 was only $1.21 billion. However, the revenue of second quarter year 2022 is increasing until $2.08 billion. Automotive sector and industrial sector grew 38% year-over-year to 66% of revenue. Along with the increasing of revenue, the gross margin of onsemi also grew. onsemi achieved a 49.7% of gross margin in Q2 2022 from 33.5% Q3 2020. Gross margin expansion driven by favorable mix, manufacturing efficiencies, and elimination of price to value discrepancies. The exiting of low-margin non-core business also one of the factors that lead to rise of gross margin. Besides, onsemi has strong liquidity. The company's liquidity has increased from the same period last year. Currently, the quick ratio is 1.88, which shows the ability to cover short-term cash needs. The quick ratio is calculated by dividing a company's most liquid assets like cash, cash equivalents, marketable securities, and accounts receivables by total current liabilities. It is an indicator of a company's short-term liquidity position. It is important especially in this interest rate hike economy. Although the future prospects and the fundamental of the company are strong, there are some risks you need to know when investing on Semi. The prices of the used car have skyrocketed over the last 2 years, and finally the prices was going down recently. This will cause a short-term risk for on Semi. When the prices of used car drop, people will tend to buy the cheap car, especially in the slowing economy. Besides, if the interest rates continue rising, there might be some people not able to afford the installment and forced to sell the car. Once these cars go into market, the prices of new cars and used cars will drop again. Although most of the cars will be gas cars, this will also cause minor effect on the EV markets. Another risk will be the profit margin of on Semi. The demand of the automotive chips are still huge and the shortage does not get better from last year's, but the demand will eventually comes down and the shortage will be fixed as customers' orders normalize. Once the semiconductor supply chain's back to normal, the profit margin of on Semi might drops. In my opinion, I think that on Semi is well positioned in the long-term power industry. But there are few uncertainty in near term and the stock price also rise a lot. However, I think the management of on Semi will able to break through the dilemma since the company have the determination to exit other industry and focus on the automotive industry. If you have other opinions, let's comment below. Please help to like and subscribe.